Before we dive into the discussion, and I'll anchor ourselves in the discussion with an opening statement, I'd love for each one of you to introduce yourselves as quickly as possible. And maybe we could start with Roland, far out there.
Perfect. Well, I'm Roland. I'm CEO of solarisBank, and welcome.
I'm Nigel Verdon. I'm the CEO and co-founder of Railsbank.
Steve Kirsch. I'm the CEO of Token.
And Boden, CEO and founder of Starling Bank.
Thank you. We're going to have to share. Gilles, Gade, I'm founder and CEO of Cross River in the US.
Wonderful. Thank you. For my first time as a moderator, a panel that actually is following the directions. Introduce yourselves succinctly.
You scared us.
Yeah, that's good. That's good. All right. So here is the anchor and the opening to the discussion. And I'm going to borrow a definition of what a platform is, and then we'll be able to see how that resonates with the five of you. And if it does, what type of progress have we made towards that? And if it doesn't, why? And what type of other progress you've seen from a platform perspective, right? So the definition that I'm going to borrow is from actually I think it's the CEO of Microsoft. And if it's not the CEO of Microsoft, it's the previous CEO, Bill Gates. So his definition is that a platform, right, creates more value for the actors that interact with the platform than the platform owner. So from that perspective, a company like Microsoft is really a platform. A company like Facebook is not necessarily a platform because they, gather much more of the value created to themselves as opposed to third parties. And I've always been intrigued by that definition, and I've always wondered if it applied to the various business models and the various startups that we've seen trying to develop a platform service and a platform model in financial services. So who would like to start us up and tell me if I'm full of horse manure or if I'm on the right track?
Shall I start?
Sure.
Okay. The definition of what we do as a business and whether it's the true use of platforms can be debated for long and hard. But I think that we have a case study on this platform in that Nigel has built a business on the Starling platform, and he's also building a business on other people on this platform today. So it's all about facilitating other businesses. When I started Starling, I set out to build the world's best banking platform for our own use. We have a strong retail and SME business in the UK. But the next stage was to allow that platform to facilitate other people's businesses. And people create value. People out there, and I think I was in the green room, and 6 or 7 of the people in the green room were actually creating new businesses, giving new value to customers on the Starling platform. That's creativity. That's innovation.
Anyone in disagreement or wants to augment what Anne said?
I'm not sure it's a disagreement. It's just that I believe that what the platform does is that it enables your clients to become vendors. So in other words, let's say Stripe, for example, needs ACH services in the US, right? Or they need push-to-card services. So they're going to go to a bank. If the bank is a platform bank, then anybody who is going to be API-based, connected to that bank, as a client, let's say a Lyft now, right, is going to have access to Stripe services because Stripe is already connected to the bank. So Stripe is originally a client, and they become a solution for a new client of the bank called, let's say, Lyft or Uber or Airbnb or anybody in the gig economy. So it becomes a referral system because everything is API interconnected. So you have, originally the service that you're providing to a payment facilitator, such as Stripe, such as Plaid, or many others, or PayPal, or Square, or whoever that may be. And then suddenly these become the vendors of potentially new clients of the bank. And that's where the bank becomes a platform a little bit like, not like Microsoft, but I like to associate it more like Amazon AWS. Amazon Web Services. Just my 2 cents.
Any
I don't think I would disagree, but in detail, each and every of our value propositions is probably a bit different. And so in nuances, I think we differ. From a Solaris point of view, we also offer the regulatory framework for all of our clients, so they couldn't do the business that they are doing that we enable them to do. So for solarisBank, the banking license, in addition to, of course, all the tech and API, is a vital part of the value proposition. And I think to that extent, I mean, we operate in continental Europe and others operate in other markets, and in those markets, then you have different rules and regulations. There we differ, but overall, I wouldn't disagree with your statement.
From a platform. I think the succinct thing is a platform, that definition's a lovely definition. And we look at it through the eyes of some Amazon, not so much AWS, but from Amazon you have a merchant and you have a consumer. And a consumer can also be a merchant, and a merchant can be a consumer. So the platform facilitates trade and commerce between two parties. So we look, and in the banking world, there's a slight thing, a little wrinkle in the way called regulation. So a platform must not only provide the ability to facilitate commerce, and that's what the sort of tech layer does, it must also provide a regulatory layer, so the regulations are adhered with. And we're seeing increasingly as also an operational layer, so somebody actually wants to outsource services so they can be a merchant. And if you look at how banking may move forward, you're saying 5-6 years ahead, most of the products within a bank are totally undifferentiated. A faster payment or a SEPA payment is no different from any bank you buy it from whatsoever. And everybody has intense amounts of money spent on doing something that's totally undifferentiated. We, and there's quite a few papers out on a similar subject, believe that if there's banks doing best-of-breed product and best-of-breed access, platforms will allow that product to be distributed to other markets with regulation and be white-labeled by other providers, very much as we sit on top of Starling and also announced today on top of Cross River as well. So the whole concept of bank platform, in our views, is a facilitation layer. It does allow two parties to do commerce and make money on themselves on top of it. And it allows distribution to products of countrywide banks to be able to distribute their product, maybe best of breed in the future, to client bases they wouldn't ordinarily reach. Combined with the regulatory piece and operational piece is our extended definition of platform for banking.
Take issue on one of those points. Could I just say that we may be in a world where some of these services are commodities. You just said that a faster payment is a faster payment. But a faster payment has to be available all the time. And what we have at the moment is new entrants into these payment schemes. And these payment schemes depend, each participant in that payment scheme depends on the others. And therefore, it's very, very important that the availability and the service levels are very, very high. And in that respect, when people are choosing these services, it is just a little bit more than just how much you pay for the service. It's whether your customers can depend on it. Because these new businesses are building their business on our business.
Steve, any?
Just very quickly to answer your question, I think that definition is as valid today as it was when it came out originally. But you're seeing people who are kind of do a little bit of both. So in the case of Starling and Railsbank, in the case of Starling and also Cross River, they're also banks by themselves, so they can exist just fine without having any of their partners that use their platform. But they also have a platform business that they get revenue from. And so, but when we're referring to their platform, it is strictly by your definition. So my answer to your question is that's a pretty good definition of a platform where you're providing a service for the parties. And in our case, our platform, we provide the ability for banks to very quickly get on PSD2 In some cases, we've had, we got 6 banks on in 6 weeks, all simultaneously in one country. So very easy for banks to become open API compliant. And on the flip side of it is we allow developers to have a single API to all the different PSD2 compliant APIs. And so that provides an extreme service for developers because they don't have to write to all the different APIs.
Okay, well, thank you for all 5 of you saying that my definition is somewhat correct, to extremely correct. But I have to admit that I'm now a little more confused, actually. First of all, I have a prior, and most probably a lot of people in the audience may have the same prior, right? Banks have historically not been able to share whatever value they've created across the value chain. They control everything. So the banking model is about more controlling than partnering or creating a platform. That's first point. The second point is some of the examples that you've given, right? Stripe or AWS, either directly in financial services or indirectly, are actually not banks. They're technology companies that create platforms. And even though we have 3 entities here out of 5 that have banking licenses, I wouldn't categorize you as like major incumbents. So can a platform business really exist in banking, or do you have to be a completely different animal to create the platform opportunity?
Global transaction banking historically has worked on the basis of people, banks across the world cooperating to give the end customer better service. You know, some of the biggest transaction banks in the world, you know, Citibank in the front, whatever, the Deutsches, the JP Morgan, the Bank of Americas, those banks have had strong transaction banking businesses that supported each other. The real question we have to consider is that business model of global transaction banking is dead. It's too expensive. It's difficult to engage with. You cannot get a new account for 6 months in some cases and another 6 months for implementation. What we are doing here on the platform is actually taking that model and replacing it by new technology, API-enabled, an organization that's easier to engage with. You use the analogy of AWS. You know, Starling, we sell retail customers retail banking products, SME customers, SME products, just like Amazon sells their own books and somebody else's goods. But Amazon went on to open up their platform to the world as AWS because they were providing the best possible technology. And what we are doing, the people that are in the banking as a service proposition, are opening up that infrastructure, the banking license, the technology, and the way of doing business to create value for the whole transaction banking world in a very, very different way.
Yeah, I'd say there's one extension. I wouldn't say AWS is a pure similarity to the original definition, which Pascal said, because AWS is just an enablement layer. That I did better tech, I industrialized tech, I did something industrialized. But it isn't, it's, as opposed to Amazon itself, Amazon was allowing people to do commerce as opposed to opening up their tech to do something better and industrialize it. So the future of what I call a platform bank is one, allowing two parties to do commerce and make money, as I said earlier. The industrialization piece, which I follow on from Anne's thing, well, faster payments are faster payment. Well, we've got standards we all have to adhere to in the club, and that is super important. Those are enforced by audit, they're enforced by standards you've got to adhere to, and they're not rocket science standards to do. But once you've industrialized those, including faster payments, card issuing, all the things that are highly bespoke processes at the moment, then you have an AWS, essentially, service that you can deliver to the customer alongside your platform, which is the commerce enablement side. Just one other thing I'd just say is, platform is also, we also play around, do we compete with customers or not, or do we enable customers? And that's one philosophical area which Amazon sort of works with customers and competes against customers. We philosophically have a view that we're enablement and commerce enablement, but we don't compete with our customers.
So I would say that your assertion that it's hard to do both is correct. And because we're in fintech, let's use open banking as an example. I think that the banks had to be dragged into doing open banking, and also that because that's not their core expertise, that creating that platform business is actually quite a bit different in terms of really understanding what developers want and need and so forth. And that, you know, when we first got into open banking, we'd ask the biggest developers, how many APIs do you want to write to? And I went to one of the biggest financial software companies in the UK, and they said, well, we only have resources to write to one API. So, you know, now we've got all these different APIs because everybody's doing it differently. It creates a total mess. And it's not really open banking because it's kind of, maybe it should be really called a little bit open banking, because instead of it being no APIs at all, we've only opened it up to people who are qualified as an AISP or a PISP. We have not truly opened up banking. And so here's all this effort and hundreds of pages of specs and so forth. And you look at this, and they're not doing digital identity the right way. They're not doing authorization and authentication the right way. And you look at, you know, it's kind of like these are bankers trying to get into the platform business. And I think that it's hard to do that. I think if you really want to do a great job of it, you have to think platform first.
Gilles, and then Ron after this.
So, first of all, Pascal, it's a great question. I just wanted to say that before I start. It's a fallacy to believe that Chase, Citibank, BofA, Wells Fargo, Barclays, HSBC cannot compete in the fintech world. They can. Every single one of them have 5,000 plus developers. If they wanted to, they could. There are two issues. Number one, first issue is they have to face their consumers. Are they prepared to cannibalize their own business, right, at the expense of the new entrants? If they want to facilitate the fintech ecosystem, they're inevitably going to have to cannibalize some of their businesses. So, for example, if they wanted to do marketplace lending, they would have to cannibalize a lot of their credit card origination. So that's inevitable. So you've got to change your DNA. You've got to move away from, or stepping away from being a consumer bank. And once you have achieved that, then you can actually embrace the fintech ecosystem. That's the first issue. And that's the reason why the major banks haven't embraced it yet. And even if we saw some sort of an attempt between Amazon and Chase, we know how that's going to end up. They're fighting for the same consumers. And there's a mega branding issue. So that's the first issue. The second issue that I would like to share is a regulatory one. You've got to change the regulatory status quo. Is it worth it for Chase or Wells Fargo to venture into a re-risking when they've been engaged in de-risking for the past 15 years? For AML issues, for regulatory issues, or whatever the case may be. Us, at our level, it is 100% worth it. We want to challenge the regulators. We want actually to sit down with them and try to bring them to the table to make them understand that there's a new regime, there's a new way of doing business, and these guys are here to stay, and that's the fintech ecosystem. So you've got to change your DNA on two fronts. Number one, you've got to be prepared to cannibalize your consumers if you have consumers. In our case, we don't, so it's not really an issue. And number two, you've got to change your DNA in the way that you're looking at the regulatory environment.
Ron?
So I would say, and I don't think it's too controversial if I would say, banks traditionally have been not very good at dealing with their clients and with data around their clients, and I would look sort of 25, 30 years back and the evolvement of how they have been doing with that. Over the time, of course, consumers made extraordinary good experiences in touch points with other entities, and I wouldn't say, again, banking is particularly sexy. I don't think it is. But I think if you look at an Amazon or all the big techs and some smaller consumer finance value propositions, they do an extraordinary good job in taking care of their clients. So what we do is we enable those to move into the turf of the banks, because if you consume a product, it generally comes with a payment function or with a credit function or with a savings function or any of those components. And I think the customer journey and experience that the client has with those partners just don't want to share with other banks, because traditionally they have not made good experiences. So what we do is we enable them, we allow them to offer the full spectrum of financial solutions within their value proposition. And therefore, I think that ecosystem that evolves ultimately will be superior to one that only focuses on banking services, because banking services have always been our nature. So I think those banks that want to compete in the long term with the companies that you have mentioned, I do think they need to open up, and not only with open banking, but also probably with offers that are far more than financial services.
Could I add a sort of a point about how you go to market in the agency banking world in big banks? Yeah, there are two things stopping the big banks being successful in banking as a service. It is the technology that has been built over many years and is legacy. But it's also how the organization within the big banks, within the transaction banks of this world, and how that organization that sells agency services, banking services, is positioned. Those transaction banks within Citi or JP Morgan or Bank of America, whatever, they're seen as being slightly back office, and the product has always been has been sold alongside credit. And post-financial crisis, when you have the credit being pulled into the center and a lack of propensity to lend it around the world, together with the various AML fines, has resulted in those big transaction banking organizations in those big banks being starved of investment. And in that scenario, it's allowed people like ourselves to offer innovative solutions, standalone, that are very, very easy to engage with and easier to buy from. It's just as likely to be who we are and how we sell the service than the technology we're offering.
I want to bounce off of one of the points that Gilles made, which is changing the DNA and the culture, one on the banking side, but also with regulators. You mentioned that, right? And it strikes me that we have 3 bank licenses on the panel and 2 non-bank licenses, i.e. you don't have bank licenses. So is a bank license a requirement to get a platform business up and running because you need to interact with regulators, or maybe you have 2 other persons that here that are going to have a completely different view? I'm wondering if it's a cost impediment if you really want to change things drastically, or if it's a lever for something else.
Short versions, no. The only reason you need a banking license is if you want to get into the business of lending and you want a decent net interest spread and originate deposits cheaply. And a very good background in banking is my great-great-grandfather was one of the founders of what's called ANZ Bank. So reasonable understanding of what balance sheet's about. Platform, I don't think needs balance sheet. It's a transactional business, and thanks to the FCA and others have been pushing for non-balance sheet type regulation to allow non-balance sheet people to participate in the sort of payment side, like faster payments. Also, coming back to the DNA side, if you look at real platform businesses and financial services and financial, and nobody's mentioned the Chinese here, and let's put data protection and a few other major issues aside over there. And you look at, say, Stripe and others, if you look at the contribution to market cap per head count of all those companies, it is about 10 to 20 times that of a balance sheet business. So I think the raw platform businesses are very tech-led rather than bank-led. Then if you look at the DNA of the board of most platform businesses is tech guys who've got some banking experience, as opposed to having to have a balance sheet. You do need people who've got real responsibility, real experience, and real banking capability. So there's different DNAs in the company. And I only experienced it once when I worked for Swiss Bank many, many years ago. It's called UBS today, is when there was DNA of tech in the board as well as also tech, and we totally radicalized the FX options markets by doing something very simple, by giving people flip charts on the floor to tell them to buy and sell. So there's a DNA thing fundamentally, I think, between what truly is a tech-led platform business, which is about people, and the leadership as well.
Any of the bank licenses want to counter this? Because the gauntlet has been thrown. Roland, you're laughing. One second.
Thank you for the compliment, first of all, about the abilities to run a bank you just mentioned. So I think we have those. I mean, you don't have to have a banking license, of course. But then you can't offer the products that we're offering. And I think if I look at the clients, if they want to have ultimately a full suite of products, I think it helps to have the banking license. You might not use it to the full extent with each and every client, but it certainly doesn't create a problem if you have that ability. We have no intention of building a large balance sheet, but look, again, technology helps you to get rid of that balance sheet very simply, and there's great fintechs out there that enable that. So you can be both without running the problem of running a large balance sheet.
So I'll disagree with that respectfully. I think that it's actually kind of a disservice if you have a banking license, you want to use that banking license for something, and probably to promote your own banking services. And a platform by its nature ought to be very level playing field. And the whole thing, if we can move banks right now and open them up, it's kind of like the transition on cell phones when we had mobile phones, but then all of a sudden we had programmable mobile phones called smartphones. And within a few years, everybody abandoned those mobile phones because these totally open mobile phones were so much better. And we have the opportunity to do that in banking. So for a platform provider to come in who can create a level playing field for the developers to cooperate, and also for the banks to provide services, and for fintechs to provide services on the platform where everyone can access that. And when that happens, that's going to be an incredibly powerful transition for fintech. It hasn't happened yet. And there's some places like Bahrain where the regulator, the central bank, and the banks are all working together to create an advanced fintech ecosystem that all works together seamlessly. And I think that's the future.
Yeah, a lot of people ask us, do you really need to be a bank? And I think you need to be a bank because you have to provide, at the end of that API has to be the complete service that our customer wants, which is a banking license together with a tech. I'm a computer science statist that spent most of my career in big banks, and I realized I couldn't fix the technology, the infrastructure, the culture to actually improve the customer experience and reinvent that industry. So that's why I started Starling. But a lot of people say, well, sort of why do you have a retail business, an SME business, and you're a platform? Are people prepared to buy from you, your platform services, if you're already competing and in the market competing against your own customers? And my answer to that is the fact that, the proof is that one of the big 4 banks in the UK is now using Starling for their payment services for the new bank. We are providing services to government. We are providing services to many of the people in the audience today. And the reason they trust us is that we are providing that service in a great way to our own consumers. When you actually choose your partner and you choose your platform, you can't risk a problem. And therefore, you're far more likely to buy those services from somebody that's a proven record that's delivered it day on day in.
So, you want to go, Nigel? You're a client, so I've got to let you go first. So.
Just respond to say one thing.
I want to make sure you're paying your bills this month.
But you're talking about, I was just making the music comment on, when you're saying about trust, I'll just say my co-founder in Railsbank was a nuclear weapons officer on the submarines in the Royal Navy. And generally, when you've got somebody of that ilk protecting your tech, they know how the tech works, the testing, etc. Because if something goes wrong in the nuclear weapons world, it goes seriously wrong. Something goes wrong in the submarines, it's seriously a bad thing happening, which has been in the press recently. So I don't actually think having a bank actually means you're great at your stack and a banking license. I think having great experience of delivering real-time, world-class systems, and I totally agree with Anne on customer experiences too, is what's super important in terms of reliability. And I don't think you need a bank to have reliable tech.
So there is a big discussion in the US today with the limited charter. So the OCC opened up some sort of a limited charter to fintechs. It appears that mostly lenders are interested in that. And folks like Square Capital, SoFi, Lending Club maybe potentially, maybe a firm. You know what? Bring it on. And at the end of the day, it really validates our model. And because they want to become like us. So actually, it validates the model that we are promoting. Now, you know, they're going to have a choice to make. If they really want to embrace 200 years of regulatory compliance, because that's in our DNA, so the DNA that you need to add to that is the flexibility to become innovative and to embrace technology and to understand what the innovators are talking about. So once you have those two components, now we're offering a service whereby compliance costs us anywhere between 10 to 12 bips per loan, let's say, in the lending space, and probably a quarter of a penny on the transaction. So can you rival that? If you want to become a fintech charter that actually embraced the OCC limited charter as a bank, as a de novo bank, being limited, first of all, you're going to have to spend an exorbitant amount of money to ramp up your compliance management system. Number two, you're going to have to compose it with the regulators. You're going to be limited to your growth for 7 years as a de novo bank, potentially. And number three, you're going to have to choose whether you're actually making loans as an OCC charter or taking deposits. You can actually take both. So you can't finance your loans with your deposits within the confine of a limited charter. That's why it's called limited charter. So now you may go full-fledged, in which case, again, it validates our business model. But they're going to have to embrace 200 years of regulatory compliance. They're going to have to beef up their compliance management system, and it's a tremendous endeavor. And it shouldn't be, first of all, poo-pooed or regarded as something that is easily replicable.
Switch gears for a second, and I'm going to ask each one of you to be a little personal in your journey. My assumption is, and you're in different stages of development, right? At the very beginning, you probably had a view of what a platform was or what you wanted to build, as a platform business, right? And as you've operated, you probably have noticed certain things that didn't work, certain things that worked, problems, roadblocks, and so on and so forth. So I'd love for each one of you to spend, 1 minute or 2 minutes and to kind of tell the audience what you learned and how your thinking matured, and to the extent that you had a few pivots or aha moments with the platforms that you're building, which were they? Maybe, Roland, you could start us off.
Sure. Well, I think we're kind of the baby in the group, and I think we're only 3 years old. So I think the development for us was one of building the platform for the first 2 years, and then a proof of concept with the clients in the different business segments in the third year. We always centered around account, card, credit, and payments. And what's sort of completely new on the journey, sort of mid-2017, all the blockchain initiatives came up, and that required for us to do a quick deviation to build a blockchain team. And now we have integrated actually the first fully fledged blockchain account in Germany for retail investors to go back and forth between fiat and cryptocurrencies with a partner. And I would say those type of things you always need to be open when there is a new technology that evolves and it requires adjustment of the existing course.
First observed change in financial markets back in the 1990s, early 2000s, when the capital markets went through what's called Fintech today. Because in the early days we had video screens, and those video screens had a video switch back in the machine room, and there wasn't the concept of digital at all. There's a massive digitization of that, massive information advantage, and massive disruption in capital markets. And we saw that wave, and the first company I built was a prime mover in that wave of doing the very first foreign exchange trades over the internet, for example. So roll on. My last company I founded was a business called Currency Cloud. I found that back in 2007 because somebody annoyed me by overcharging me on currency rates. And then I wanted to get APIs to be able to do anything. I couldn't get APIs from anybody, so we went out and built that. At the same time, two other friends built this company called Transferwise, another built Revolut. We saw all these as PowerPoint decks, and we helped put them all in business at Currency Cloud. So one of the things I learned then was, and it still didn't exist, well, I still wanted APIs, not just into payments, not just into bank accounts, but the full stack of transaction banking, from issuing accounts to issuing IBANs, to send money, receive money, collect money, direct debits, and issue cards, everything to the transactions. And it didn't exist even when 2015, when I stepped down from Currency Cloud to found to Railsbank. So the story here was based out of not trying to find a tech to go and solve a problem. It was a real-world problem that I couldn't get resolved, I couldn't get done. So we went out and decided to go and build it. And I was lucky, my co-founder Clive, who we've grew up together since we're 13 years old, went to university together. He then joined the Navy, and I built another business that he came and joined after the Navy. Suddenly he's leaving a company, and it's coming back to quality software again, 14,000 people with 900 million sterling turnover. We decided we can take all our expertise that we learned in the 1990s and go launch the business, which we believe does enable people to give real-time API access to banking and ability to launch a neobank with code, just code, so it's not very exciting, within 15 minutes. And I think we're the only guys in the world who's done that.
So we started off with recognition of a problem in terms of just moving money, whether it's between an account at your bank to another account at your bank, or to an account maybe somewhere in the same country or overseas and so forth. Dealing with banks, if you just got a deposit in and you're trying to find out electronically whether you got that. In a lot of countries, there are no APIs at all to the banks. And so our vision was, hey, we can bring a standardized API platform to the banks and open up banking and make it much more useful in the same way that cell phones became a lot more useful when we had smartphones that were programmable and open up. So we started that journey several years ago, and at the time we'd go to venture capitalists and they'd kind of laugh at us saying, hey, trying to bring banking into the digital age, that will take years or decades to do that, and you're never going to get any traction. And so when we found out about PSD2, we said, haha, now we have a reason to buy and a reason to buy now. And if we came in with a product so that banks could become PSD2 compliant in a very short amount of time with a very small investment in both time and money, and they'd have, they don't have to worry about all of the terms and conditions, they'd be compliant, and they'd have a great API. That would be a great sales pitch to the bank. It's cheaper, faster, better, all that stuff, and logically it's a no-brainer. But then of course you run into banks and you find out that, oh, you're a startup company. Well, we don't deal with startup companies, and it'll take you 2 years to get through procurement, and there are all sorts of, and our IT staff says that they have to do it anyway, and the hard part is creating the internal APIs, and the external APIs are a piece of cake, and we don't need you, and why should we buy from you? And it's and so it was. So the VCs were right. It was hard to get traction, but we stuck with it. And by sticking with it, then we established a lot of credibility. We were the first vendor to connect and do payments in the UK open banking system to all of the banks in the CMA9. And so that credibility led us to other things, and it's now we're like doubling in the number of banks in the next few months versus where we were before. So things are actually coming along because we basically stuck to it rather than sort of listening to the traditional logic which says this will never happen. And so it was a lesson in that, oh, those guys were right. It was a lot harder than we thought it would be. But by sticking with it and getting a few lucky breaks, we were able to break out of that and get a lot of traction.
I think Starling and what we're doing here in Starling at the moment comes from several things in my background. I'm a payments geek. You know, I was 30-odd years ago, I was part of the first real-time gross settlement system in the UK. I'm a technologist. I built technology in banks throughout my career. And during that career, I made lots of mistakes. I outsourced, I offshored, I re-engineered to take the passion and the innovation out of the creation of software. And then I'm a banker. And I've run the biggest global transaction services businesses across Europe and the world. Starling brings all that together. It is a vision to create a new banking infrastructure, a new way of doing payments, a new technology stack, and I'm a big believer in the API economy. But to build what we've done in Starling took 25 years, and it was too audacious for many people in the beginning. People didn't believe we could do it. But we've done it, and we've delivered it, and we've got it just right because we use it for our own customers. And those customers give us great feedback that we can refine the proposition and build the model. We're in the UK at the moment, we're going across Europe, and we have global aspirations. Because couldn't it be great if we could join the world up, either between companies like ourselves or other organizations, to give people the innovation in payments and banking that they've had in other industries. We're still a long way behind other industries. We have a lot to do in banking. And we can't keep blaming the legacy banks forever. We now have the cash, we now have the investment to change this industry. Let's stop criticizing regulators and legacy banks for the problems this industry now has.
Wait 1 second. This is France. This is a country that lives on criticism. So if you tell people to stop criticizing, you're not going to do well in France.
So very briefly, my aha moment was on a panel such as this, maybe 5 or 6 years ago at the St. Louis Fed, and they were talking about fintech, marketplace lending, and then there's an OCC, big honcho that was on the panel, and he said, oh, Cross River, you guys in the public, like there were a bunch of regulators, a bunch of banks, and he said, oh, you guys are the rent-a-charter guys. And that really just basically, that was a spear in my heart. And anything I didn't want to be, which is a rent-a-charter, and basically my endeavor, our endeavor as a team, was to change that stigma and to actually embrace the fintech ecosystem. That means we're going to put our balance sheet at the contribution of the fintech players. We're going to become a monster of payments. But then comes the challenge, is that because you're punching above your weight, you've got to suddenly be compared to a much larger bank than you actually are. So you've got to spend on enterprise risk management, on compliance management system, on technology, on cybersecurity, on insurance, et cetera, et cetera. I would say these are the two really. The first one is, we've got to embrace this economy. And number two, it comes at a price. And the price is better risk management, better compliance.
Well, thank you for sharing. So we have 4 or 5 minutes left. Any questions from the audience? Please. Yes. And we have we need a mic. We need a mic.
And you touched on this in your last comment. Regarding becoming a global transaction platform or platform, to what extent, because I think most of you are either in Europe or in the United States, to what extent is there interest to go beyond those regions? And to the extent that there's interest, how much does regulation actually prevent you from doing that?
Was it directed at one person in particular, or?
I've run businesses, banking businesses, transaction banking businesses across 30 or 40 countries with that many regulators. That's one way to do it. Another way to do it is actually cooperate. And that's how the big banks have built up their propositions, is cooperation. We are cooperating on the panel today. We have connections between the groups here. We work together to get the right solution to our customers.
In short answer to ambition, yes is a short thing. I think Anne mentioned ambition earlier. We just announced a partnership today to go to the US, and we're launching in Southeast Asia in Q2 this year. In terms of regulation, I don't look at it as a barrier. It's something you've got to do, you've got to respect, and you've got to have enabled and either partner with somebody. And the world, especially people like the colleagues around on the panel here, the fintech platform type of ecosystem massively works together. That's one thing I've learned since the moniker was phrased in sort of by the media in Q1 2012. There's been a sort of, even if we compete, we also help. And I think that mindset is going to help create global sort of global platform banks, because doing it by yourself is very hard and very lonely.
One here? All right.
Hi, my name is Guy from Rewire. I have a question more for the European players. How do you choose your partners or customers? And specifically, do you prefer regulated entities or non-regulated entities?
So maybe I start. We have a European banking license, so that allows us to operate in all across Europe. UK needs to sort out some things, but eventually we'll figure that out as well. And so basically, we choose our partners by the need of the partners in financial services. So you know, if I look at Solaris, the journey, you start out, and I agree with many of the comments that were made about a small company that needs to earn their dues first, and then you move into the next category of clients, and now we operate with corporates like Börse Stuttgart, so real large organizations. And preferably, if you're a large corporate with deep pockets and you want to expand into financial services, you can rest be assured I'll take personally care of you.
One more? We have time to one more, 1 minute. All right.
How does an investor make money in this space?
Is there an investor in this panel?
Look at PE ratio of played.
What was it?
PE ratio of played.
No, but he asked, how do you as an investor? Well, I mean, you get in early, obviously, in a startup that's going to take off, and you know, so you look for trends, and I think it's no different in this space than any other space. So there's some interesting trends that are happening in fintech. There's stable coins, there's open banking, and so forth, and so you look to find the leaders in those areas, like us, for example, and you invest in those companies early.
Quickly, one last response. Go ahead.
So, I mean, our role, obviously, is to create shareholder value. I believe the way to do that is to continuously innovate, to keep the door open for the fintech ecosystem to come in, to be prepared. That means from a regulatory standpoint, from an enterprise risk management standpoint, from a balance sheet standpoint, and capital standpoint. So if you have all these components, then I think you know, we're gonna make a lot of happy campers as investors.
All right, and we're out of time.